Welcome to Iraqi Dinar News, where you receive real and authentic updates about the Iraqi dinar. If you want to stay informed with moment-by-moment developments, make sure to subscribe to the channel and like the video. In today's update, we're taking a careful and professional look at a circulating claim suggesting that the United States has suspended the flow of US dollars into Iraq, and that this situation could place pressure on Iraqi authorities to introduce a new exchange rate for the Iraqi dinar. This topic has generated significant discussion among currency watchers, investors, and those closely following Iraq's monetary policy. However, as always, our goal here is to separate speculation from economic reality and provide a grounded analytical perspective. To begin, it's important to understand the role that the US dollar plays in Iraq's financial system.
Welcome back to the Financial Desk. We're
Iraq
tracking the latest
operates a
movements in
dual
the market
currency
as the third
environment
quarter comes to
where
a close.
both the Iraqi
We
dinar
analyze the
and the
projected
US
growth
dollar
shown in
are
these
widely
reports.
used. The Central Bank of Iraq manages dollar liquidity through a mechanism often referred to as the foreign currency auction system. This system allows banks and authorized financial institutions to access US dollars, primarily for trade-related purposes, such as importing goods and stabilizing domestic prices. The claim that there's no more dollars going into Iraq should be approached with caution. In practice, a complete halt of dollar flows into Iraq would be highly unusual and economically disruptive. The United States, through regulatory oversight and financial agreements, has at times imposed stricter controls on dollar transactions to ensure compliance with anti-money laundering standards and to prevent illicit financial flows. These measures can temporarily reduce or restrict access to dollars, but they do not typically represent a total and permanent suspension. If there are tighter controls or reduced dollar inflows, the immediate effect would likely be felt in Iraq's parallel currency market. The exchange rate between the dinar and the dollar in the open market could come under pressure, potentially leading to depreciation of the dinar if demand for dollars exceeds supply. This has been observed in previous periods when dollar access was constrained, leading to a widening gap between the official exchange rate and the market rate. Now, let's address the central claim that such a situation would force Iraq to introduce a new exchange rate. From a monetary policy standpoint, exchange rate adjustments are complex decisions made by central banks based on a range of macroeconomic indicators. These include inflation, foreign reserves, fiscal stability, trade balances, and overall economic growth. A sudden or externally forced revaluation is not consistent with how modern central banking operates. In fact, if dollar inflows were restricted, the Central Bank of Iraq would more likely focus on stabilizing the domestic currency rather than revaluing it upward. A shortage of dollars can create inflationary pressure as imported goods become more expensive. In such a scenario, policymakers would typically aim to manage liquidity, support the dinar, and maintain confidence in the financial system. It's also important to consider Iraq's foreign currency reserves. Iraq holds substantial reserves, largely derived from oil exports, which are priced in US dollars. These reserves provide a buffer that allows the central bank to intervene in the currency market when necessary. Even if external dollar flows were temporarily reduced, Iraq still has internal mechanisms to supply dollars to its economy. Another key point is the distinction between a redenomination and a revaluation. Discussions about a new exchange rate are often misunderstood. A redenomination involves changing the face value of the currency, such as removing zeros, without altering its real purchasing power. A revaluation, on the other hand, is an increase in the currency's value relative to other currencies. The claim we're analyzing seems to suggest a revaluation, but such a move would require strong economic fundamentals and a strategic policy framework. Looking at Iraq's current economic landscape, the country is in a phase of gradual reform. Efforts are being made to modernize the banking sector, improve transparency, and integrate more fully into the global financial system. These reforms are essential for long-term currency stability, but they take time and are not typically driven by short-term external pressures alone. In the short term, if dollar access becomes more restricted, we could see increased volatility in the exchange rate within local markets. Businesses that rely on imports may face higher costs, and consumers could experience rising prices. The government and central bank would likely respond with policy measures aimed at easing these pressures, such as adjusting auction mechanisms or implementing tighter controls on currency speculation. In the long term, however, reduced reliance on the US dollar could be seen as part of a broader strategy to strengthen the Iraqi dinar. Many countries aim to increase the use of their national currency in domestic transactions to enhance monetary sovereignty. If managed carefully, this transition could support economic stability and reduce vulnerability to external shocks. But again, this is a gradual process, not an immediate trigger for a dramatic exchange rate change. It's also worth noting that international financial relationships are governed by complex agreements and mutual interests. The United States has a vested interest in maintaining financial stability in Iraq given the country's strategic and economic importance. Any policy changes affecting dollar flows would likely be coordinated and communicated through official channels rather than occurring abruptly without clear explanation. For Iraqi dinar followers, the key takeaway is to remain cautious about claims that suggest sudden or guaranteed changes in the currency's value. The idea that external pressure alone could force a revaluation oversimplifies the realities of monetary policy. Currency values are influenced by a wide range of factors, and sustainable changes are typically the result of long-term economic improvements. At the same time, developments related to dollar liquidity are important to monitor. They can provide insights into the direction of financial policy and the challenges facing the Iraqi economy. By focusing on verified information and credible sources, viewers can form a more accurate understanding of what's happening. As always, our goal is to provide balanced and factual analysis without hype or speculation. The situation described in the news paragraph highlights ongoing discussions about currency management and economic reform in Iraq. But it does not, on its own, confirm any imminent changes to the exchange rate. In conclusion, while restrictions on dollar flows can create economic pressure and influence market dynamics, they do not automatically lead to a revaluation of the Iraqi dinar. The Central Bank of Iraq operates within a structured policy framework, and any changes to the exchange rate would be carefully considered and based on broader economic conditions. Thank you for watching Iraqi Dinar News. If you value responsible and factual updates, make sure to subscribe and stay connected for future analysis. And as always, please remember that this content is for informational purposes only and should not be considered financial advice.